There we go. Welcome to the talk on cash tracking and what you need to be tracking for success in your business. I hope you guys are excited. I'm going to try not to do too much math, just because that's generally not people's favorite thing. So, how to know you are actually making money. That's why you're here tonight. So we're going to look at 4 numbers every business owner should be tracking. I'm going to show you one number that is vital for both your health and making money. And I'm going to show you a formula to increase your earnings now. Exciting stuff. So let's start with why. Why do we actually track anything in a business? Actually, I'm going to make this more interactive than normal. You know, I don't normally look at the chat, but I'm going to today. There's only 5 of us. Tell me why you think we track things in our businesses. What are the reasons that we need to be tracking our numbers? Brenda, see, we're not losing money. Yes, that's a good reason. Rona is see if they're working to know where we're at. Lana, yes. Okay. So yes, the first one we're going to touch on is because we have to submit tax returns, right? So we need to know how much money we're making in order to know that we are actually tracking our tax correctly. And that is linked obviously to what you guys are saying, to know where we're at. You need to know where you're at. You need to know how much money you have. Otherwise, you're not going to submit an accurate tax return. And what Rona said, we can use our numbers to tell if our product or service is successful or not. Because if you're tracking your numbers, you can tell whether you're actually making money off a particular service or a particular product, not just overall. And we can look at trends and use them to make decisions. So if we see that a particular cost is increasing, then we know that we need to pay attention and try and bring it down, or maybe we need to increase our prices, or we need to change something if we see a continuous trend. Or maybe we don't need to change something. If the trend is good, then we know we need to keep on doing what we are doing. And the more important one, we want to know how much money we, as the business owners, get to keep in your business. So those are why we would be looking at our numbers. So at least you ladies know that you got your why correct and you know why we're tracking. So let's talk about the biggest mistake that most business owners make with tracking and cash. And that is that most of us only track our sales. If your sales are going up and you're hitting a personal revenue goal, you're excited and you believe that your business is doing well. But the problem with tracking sales on its own is all it will tell you is whether you are good or bad at sales. There's a lot of things that the sales number does not tell you. It doesn't tell you whether the people that you sold to have actually paid you. It doesn't tell you if those people are happy with your service or your product and whether they're likely to buy again. It doesn't tell you how much it cost you to make that sale, because unfortunately, it would be wonderful if sales came out of nowhere and cost us nothing, but it does actually cost us time, effort, and money to produce a sale. and it doesn't tell you if the sales brought in enough to cover our running expenses. So when your sales are going up, it's a good thing. There's nothing wrong with sales going up, but we cannot track sales alone and consider increasing sales to be a sign of success. You can have exponentially increasing sales, but if your customers aren't actually paying, or if your costs are also increasing exponentially, you don't actually have a viable business. So what should you track? So we're going to look at the 4 things, starting with sales. Now, hang on, Tamryn. You just told us not to. No, you do track sales. It's just that it's not the only thing you should be tracking. But you do want to keep an eye on your sales because they need to increase. They need to be happening. If you don't have sales, you don't actually have a business. You do need that money flowing in. So we do want to track our sales. We want to see continuous income. You want to see increasing income, preferably. And you want to know your customer numbers and your sales per customer. So we do track our sales and we track numbers under the sales. For a business to be viable, you need to keep having money coming in. So you need a consistent pipeline of new clients or new services so that you know that you can carry on bringing money in the future. But we also need to be tracking costs. So you need to know where your money is going. Now, I think I know it's a small group tonight, but 2 of you are actually our accounting clients. So you're already tracking sales and income. So preaching to the choir there, but I'm sure most business owners are actually pretty good at this anyway, is having a fairly good idea of how much comes in and how much goes out. But I don't know if we always realize how important it is to track the costs. Because like I said earlier, you don't make money out of thin air. It costs us to make money. So you need to know where your money is going. And you need to know what it costs you to make your sale. Because even if you offer a service, even if it's not a product, in a product-based business, it's easy to know how much it costs to make the sale. You have to buy the product or you have to create the product. It's easy to track that cost. A service business is not as easy. There you've got to track your time and your energy and your hours and what it takes you to produce that service. It's still a cost. And then you need to know what is left over. All right. So we need to be tracking both sales and costs. And if we're not tracking those costs, we're not controlling them properly. So your business has, on top of the cost to create the sale, you have your running costs, your rent, your stationery, your internet, your telephone, all your operating expenses. And if we're not tracking them, we don't know if we're actually keeping them in line, if they're meeting our budgets or our expectations, or if they've suddenly gone up, like our horrendous fuel bill at the moment in South Africa. It's important to know if things are suddenly changing, and you won't necessarily pick that up if you're not tracking it. And the reason we track both sales and costs is because one of the most important numbers to track is profit. Your profit is actually far more important than your sales when you are judging the health of your business. Because your profit determines your tax, and of course, it determines how much is yours. The net profit after tax is the amount that you actually own. So your profit should be far more important to you as a business owner than your sales figure. You could have massive sales and no profit. You could be running at a loss. And alternatively, a much smaller business might have much, much lower sales, but be better at controlling their costs. And they could actually have a better business with a higher profit than someone who's making massive sales and losing it all in expenses. So profit is far more important. Now, next week, Bill Hershey is going to be our trainer. And he's going to be taking you through his incredible cash flow compass tool. So if you've poked around in the builder, in the portal, which I hope you have, you'll see under the free resources that he has offered his cash flow compass for free. It is available as a Google document that you just go save a copy and then use for yourself. And next week, his talk is going to take you through using the cash flow compass to track your sales, your expenses, and your profit. So that's going to be really exciting. And I would encourage you not to miss next week if you are able. But the fourth thing that we should be tracking is our cash. And that can be a bit confusing, isn't it? Because isn't that what we were just doing? Your sales, your costs, your net, that's your cash, right? But unfortunately, due to the wonders and magical ways of accounting, your profit does not equal your cash in your bank. Because profit is linked to sales and expenses, yes. But when we record them from an accounting perspective, you're recording them according to the date that you incur a sale or you incur a cost, not when it is paid. So if you sell to a customer on credit, the sale is recorded immediately, but they don't have to pay you for a couple of days. The number of days can depend on the arrangement you have. So it could be 7, it could be 30, it could be 60 days, it could be more. But making that sale does not necessarily result in cash in the bank immediately. And the same applies to your suppliers. Some of your suppliers will sell to you on credit. So you have 7, 30, or 60 days to pay them, even though you've recorded that expense immediately. So that is the first and most obvious reason why the cash in the bank will not necessarily match your profit and loss, is because of payment dates. But there's other things as well, and it would help if I moved on to the next slide, wouldn't it? There we go. I'm way behind here. Let's catch up. Okay. Some of that money in the account is not yours. You could have borrowed some of it. Many of us work with business loans. Maybe it is yours, but it's not the business's money, because actually it's a loan from you to your business to keep your business afloat. It could be from a bank or a funding institution, or it might be money the company has generated, but you might need to pay your staff their wages, or you need to pay the government payroll taxes, VAT, sales tax, income tax. So it is not necessarily your money just because it's sitting in your bank account. So cash and profit are not the same thing. And tracking cash involves a lot more than just checking sales and expenses or looking at your bank balance. So you need to track how much is going to come in and how much is going to come out. You need to track how much belongs to somebody else. So how much are you likely to have to pay in the future that's not reflected on your income statement, it's not reflected in your other tracking numbers, but it's going to go out of your bank account. And you also need to track how much saving and cash reserve you have, because some of that money sitting in your bank account could actually be savings from last year. Or maybe you are trying to put money aside because you know that those big expenses are coming. You know that tax bill is around the corner. So you've been squirreling little bits away. And your bank account looks far healthier than maybe it actually is for the immediate needs that you have. So tracking cash is not quite the same as tracking costs and expenses, and we need to do both. And the good news there is that after Bill, we have Monia coming, and she is going to teach you how to track your cash. So it's a good month if you are needing help with tracking. Bill will help you track the first 3, and Monia will help you keep your cash in good control. So you don't have to figure it out yourself. They are going to walk you through keeping those numbers under control. So those are the 4 numbers that every business owner should track on a regular basis. I recommend at least quarterly, but preferably monthly, even weekly if you have the energy. But that also means your accounting has to be done weekly, and I don't know how many of us have the energy to do all of that. Do we have any questions yet? Because we're a small group, so I can handle them quickly if we do. And no? Yes, I can see you, so I can see you shaking your heads. Okay, awesome. Right, so let's look at the 1 number, the very important number I mentioned, that if you track it, it will help you tell if your business is healthy, but it will also help keep you healthy, which is a very interesting correlation, because I'd actually love to know. I'm going to make it interactive, very interactive tonight. Tell me in the chat, how on earth do you think an accounting number can tell you if your mental health is in check? Any guesses? Thanks for the honesty there, Rona. It's a tough one. So good. All right. I won't wait for everyone to say no idea. If profits are low, no, well, we've already tracked low, but yes, if profits are low, I reckon your mental health could be taking strain. Absolutely. The number you should be tracking is called your gross profit percentage. And this is where the math is coming in tonight. Sorry, I have to do a little bit. I have to do a little bit of maths. We are talking numbers. But to explain the gross profit percentage, let's take a look at what gross profit actually is. So gross profit is your sales, which is obviously all the income that you've brought into your business, less that direct cost, the cost of sales. So whatever it took to produce that sale, not the operating costs of your business, but the costs directly related to creating your sale. So as I said earlier, that's really easy when you run a product-based business. You have to buy the product, or you have to buy the raw materials, you have to pay someone to put it together. That's your cost of sales, nice and easy. When you run a service-based business, most people assume that they don't have cost of sales. But the reality is that there will be a cost related to providing a service. If you have a team, then you have to pay your team, depending on the service provided. For example, in our accounting business, my accountants are my cost to produce sales. We're selling accounting services, and then I'm paying people to provide those accounting services. So yes, they're salaries and wages, but in my business, it's directly related to our income. So they're actually costs of sales. So depending on your business, there could be different things. Maybe you contract out certain parts of your work, or you want to claim your own hours because you worked on a specific project as a cost of sales. And that is your gross profit. It is how much money that is left over from the sale that you can then use to run the business. And all your operating costs will come out after that. That's why if you look at the income statement, it's actually separated into sections like that. You see sales, you see cost of sales, and then it shows you gross profit before listing all of your expenses and your net profit, because your gross profit actually pays for you to run your company. Okay. So your gross profit percentage, and it's easy math. I can see Bren is looking very worried every time I say the word math, but I promise it's easy, easy, easy math, Bren. It's gross profit divided by total sales times by 100. There we go. That's all you do. So you take your gross profit, you divide it by your total sales, and you times it by 100 to get to a percentage. Now, the actual percentage is not important. It doesn't matter what it is. It can be anything. As long as you are making money and you're comfortable with your profit, it doesn't matter if your gross profit percentage is 5% or if it's 95%. What is important when you track it is that over time, it must either stay the same or increase. The moment it is going down, you have a problem and you need to pay attention. Because if your gross profit percentage is reducing, it means your margins are dropping. And if your margins are dropping, it means you are working harder for less money. And that is how it will affect both your business and your personal health. And I'm going to give you an example of why it's important to track this number, not just sales, costs, and profit. So let's have a look. Yeah. Let's say you have a service business and you make money by doing one-on-one consultations and you're selling them for $1,000. You've worked out that your time and your travel and your effort and all of these things add up to 500 as your cost of sales. So your gross profit is 500. Your gross profit percentage is 50%. 500 divided by 1,000 times by 100. You had quite a good year. You averaged 10 meetings a month. So you got sales of 10,000 every month and gross profit of 5,000 every month. That's a good year. There's nothing wrong with that. This year, you decide things are getting a bit tight. So you don't want to increase your prices because you're worried that you're going to lose clients if you do. So you keep them at 1,000, but your costs increase. So your costs go to 600 and it says consult cost again, but it should say gross profit equals 400. So now your gross profit percentage is 40%. It has dropped from 50% to 40%. But because you kept your prices low, you did do more meetings. You made more sales because you're now lower than your competitors. So you got 20 meetings, you've doubled your sales, and you got gross profit of 8,000, which is 3,000 more than the average price of the year before. So that's a good thing, right? I mean, if you looked at those numbers, wouldn't you say you were doing well? It's a great thing that you're making an extra 3,000 every single month. It doesn't look like a bad thing until we break it down like this. To make 5,000 last year, you needed 10 meetings. But to make 5,000 this year, you had to do 12 and a half, which obviously we're not going to do half a meeting, so 12. That means you are doing an extra 2 hours of work this year for the same amount of money as last year. So on the face of it, it looks like a better year. You're making more money. Your profit has gone up, but you are actually working harder for less money this year. So that is why we need to be tracking gross profit percentage, not just the profit, not just the amount, because you can see increasing sales and increasing profits and increasing net profit, and it all looks amazing, but you're actually getting less for your time and you're putting yourself under strain to produce the same amount of money as the year before. We can erode our margins by not increasing sales, which is what happened in the previous example there. Is we didn't put our prices up because we were worried that we would lose clients. Or, and this is more common, by offering discounts in order to try and increase sales. It has actually happened on more than one occasion that a company has run a campaign and discounted their prices to increase their sales, and they have increased their sales, and they've eroded their margins and actually put themselves out of business. So you need to be careful, and I'm not saying don't offer discounts, but you need to be careful in how you offer discounts, and you need to be very, very, very sure that you haven't wrecked your margins when you do so. Okay, so gross profit percentage can stay the same or increase, but it should never decrease. So these are the 5 numbers that you should be tracking on a regular basis in your business. Your sales, because we want to know how much we've sold. We want to know how many people we've sold to, and we would like to see this figure increase over time. You need to track costs because we need to know where our money is going. You want to try and keep your expenses as low as possible, or at least within your acceptable budget margins. And you want to maximize the third number, which is profit. It is more important than sales, and you want to be making a profit because this is the money you get to keep and the money that gets taxed, unfortunately. So we need to make sure it is accurate. And then most importantly is cash, because it's not going to link back to sales, costs, and profit. So we need to be tracking how much future money is coming in, how much future money is going out, how much do I actually own of what's sitting there, how much do I have to pay to other people. And then your gross profit percentage, the most important number for your business health and your personal health. As I said, the actual percentage, not important, and it can stay the same. You will see if you have increasing sales and increasing profit year on year, and your gross profit percentage is the same, that's fine. That is a healthy, viable business. If it's increasing, that's even better. That means that you're making more money for the same amount of time as before. But you never want to see your gross profit percentage going down. Okay. If you need help tracking anything, that's one of the things that we do. So you can give us a shout. You are, I think, all members of the Business Builder. So you actually have access to a special offer from us. In the Builder, if you go look under special offers, you'll see that Pharsyde has offered a 20% discount on our cash and performance packages. So you can go grab that if you want to, and you can book a meeting with me to discuss it.
I hope the discount isn't eroding your margins.
Well done, Bren. No, it's not.
Okay, that's good.
But that's, yes, I'm very happy that you picked up on that. Well done.
I have a question. Are we at the question part yet?
You can ask questions. Yes, I've got one little formula left, but
Okay.
yes, ask the question.
It's just about that tracking future in and future out. Is there an advised sort of healthy, like how far in the future? 6 months, 3 months, 1 month, a year?
Okay, well that really does depend on how anal you want to be with your tracking. I would say you should be doing at least 3 months. You
Okay.
want at least 3 months of your future in hand. So you know for the next 3 months that you can meet your expenses, that you can pay your creditors, and you can pay your staff and things like that. And most cash flow forecasts will be a minimum of 3 months. But I would recommend a year if you can. You're going to be forecasting this. So they're not going to be actuals. They're what you expect. Based on the fact that your debtors can pay you within 30 days, you would expect all of the sales of this month to come in next month, and the same with payments. If you've got a 60-day arrangement, then anything you bought this month, you know, in 2 months' time, that money is going to go out. And you've got far more control of your out than your in, unfortunately, the way things go. But you forecast those amounts, and you know when you have to pay your salaries, and you know if you have to pay creditors, on which dates that's likely to pop up. Pay attention to things like tax deadlines and when you're likely to have to pay your taxes. In South Africa, that's normally August and February for provisional tax. In the UK, I don't think you've got provisional tax yet, hey Rona, but your tax payments are normally January, February, if I remember correctly.
Yeah, end of January is the deadline to submit your tax return, yeah.
Yeah, so you just plan ahead and know that that money's going to go out in January. You've got that on your forecast.
Well, what you can do if you're organized, which I'm not, is like as soon as like the financial year's just ended. So if I were to submit a tax return now, then I could actually like pay any tax owed sort of over all the months instead of having that scary big lump sum.
Okay, so it pays to be organized.
I've never been organised yet, and in fact, I'm ashamed to admit I'm just in the background Googling bookkeeping templates because I don't have anything. I just know that I'll have to do all bank statements and things. So yeah, should turn my microphone back off and hang my head in shame.
It's not an unusual thing, don't you worry. And if you drop me an email after this, I'll send you a basic template for your income and expenses if you like.
Oh, thank you.
Pleasure. So yeah, so those are the numbers though that we recommend tracking. Let me just get back onto my thing and see. Oh, the formula. Yes, that's where I'm going. So, oh, wait. I've got to pay attention to my notes, you guys, really. What I wanted to say is those of you that are Builder members, please, I know that some of you are members and you haven't looked at the portal. Go look at the portal, because apart from the special offers, there are resources. As I said, Bill is going to take us through his resource next week. There's a wonderful resource, his Cashflow Compass. And please go join the Facebook group. If you're not a member, we have the free group, the Build Without Burning Out. We'd love to have you there. If you are a member, there's the members Facebook group, and there is extra stuff in there for you as well. So please do go join that. And then we're going to look at the formula that I have for you to immediately increase your income in your business. So we're going to start with the 3 drivers of income, of which the first one is the number of customers you have, which makes sense. The more customers you have, the more income you have. But your second driver is the sales per customer, because some of your customers will buy from you more than once, some will buy multiple products at the same time, some will take a more expensive option than somebody else. And the third is the frequency of the customer purchase. Those are 3 drivers of income in your business. And a formula for your sales is the number of customers times the sales per customer times the frequency of purchase. Using these 3 drivers will increase the income in your business if you tweak the numbers. Most business owners focus on the first one. They try to make more sales. They try to get new customers. It seems like the most logical way of increasing your income is just to sell to more people. But actually, you have more success with less stress if you focus on the next 2 instead. It is much easier to sell to an existing customer than to go find a new one. Your existing customers already know you, they already like you, and they already trust you. If they've bought one of your products or services, there's a very high chance that they will use another one. There's an extremely high chance that you have services that are linked that will benefit each other and increase the value to your client. So it is a lot easier to increase the sale per customer than to add new customers. So as a business owner who's looking to increase their income quickly, it is better to put your attention here, to look at the customers that you already have and say, how can I add more value to what I do? If I sell a product, is there some form of service that I can sell alongside that product? Can I help them use this product or incorporate this product? Is there an additional product that I can bundle in? If you sell a service, can you bundle more than one service together to get customers to buy more of them? Can you encourage customers to move from one to another? The most easy way to do that is with things like training courses, because you can train in one thing and lead them on to another. I know myself, I'm very guilty for buying training courses. I love learning. But you can lead your customers through different purchases. And then the frequency of purchase makes a big difference to your income. If you can get your same customers to buy more often, you increase your amount. This is being done very successfully by software companies. In the last 10 years, the whole world has transitioned from buying software once off and paying an annual support fee to paying for software on a monthly basis forever. We no longer own software. We pay monthly subscriptions forever. The thing was, the monthly subscription is way, 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 way less than you ever had to pay to buy the software. So it is far more affordable on a month-to-month basis, and it makes sense for us as a customer to pay that little amount instead of that one massive amount. But over time, those software companies are making far more money out of us than they ever did on the big purchase, because we never stop paying. They also have to keep adding value, otherwise you'll just switch providers and go find another software. But if you can use that same thinking in your business, how do you provide value on an ongoing basis to keep your customers paying you more frequently? Maybe it's not monthly, because what you do can't be changed into a monthly service. But how can you structure your service or your product so that you encourage customers to buy from you maybe quarterly or twice a year instead of once a year? Because again, getting existing customers to buy again is much easier than bringing in a new customer who buys once. So this formula, nice and easy, quick and easy, honestly will make a massive impact to your bottom line simply by changing the second two numbers: sale per customer, frequency of purchase. And actually, the one way of increasing sale per customer, which I didn't even touch on, but it's the easiest of all of them, is simply increasing price. And most service providers are underselling themselves. I can promise you, if you're sitting there right now as a service provider, there's a very, very high chance that you are not charging your full value to your clients. And if you evaluated what you are providing and what you are doing for them, you could actually charge them more. And you're not ripping them off, because they are receiving value from you. As long as you are giving them more than you are charging them, you have every right to increase your prices. And increasing your prices has an immediate effect on your bottom line without any increase in your effort, any increase in your costs, and just overall provides you with a better and more viable business yourself. And now we are on Q&A, and I went very fast. It's 10 to 6. We have lots of time for questions. So, microphone's on, ask me.
I guess
that was my one question.
Your one
I've
question.
depleted my question.
Oh no. Come on, guys, you must have more than that.
From my side, how would you go about increasing price? Like what?
Mm.
I mean, do you just say, hey guys?
Yeah, like I have fear. That would have been my next question. Like, what if we lose
Yeah.
a big client
Yeah, look,
because of
increasing
price?
price, the scariest thing with increasing price is always, what if my client just leaves?
Mm.
The best thing to do is to actually do a little bit of an exercise. It also depends on how many clients you have, but do an exercise. Say, okay, if we increase our prices by 25%, how many clients do we think will walk out the door? How many clients are actually so price sensitive that they will leave? And then you do a little exercise. You go, okay, if we increased by 20%, but we lost 5% of our customer base, we're still making more money. Whereas
Okay.
if you leave it as it is, you're putting in a huge amount of effort and making the same amount of money. If 5% leave, that's 5% of effort you don't have to expend anymore, but you're making more money.
Mm.
So it is worth it. But the biggest thing with increasing price is we have this impression that people are price sensitive, and we have to be good with our prices. We need to make sure that what we're spending money on is worth the money we spend it on. That is very important as a business owner. But we're not really price sensitive, not any of us. We're value sensitive. You need to know that the value you are receiving is worth what you're paying.
Mm.
So if you need to increase the price with a customer, the best thing to do is actually have a face-to-face meeting and say, listen, this is what I'm doing for you. This is the value to you. This is what you're saving in terms of time, in terms of effort, in terms of the fact that you didn't have to study X amount of years to get this knowledge. And I can't keep providing you with this level of service at this price. So I can either keep the price the same, but then we're going to pull back a little and we're only going to provide you with X, Y, and Z, or we're going to increase the price so that you continue getting the value that you are receiving. And you give them the choice, because either way you're going to benefit. If you're receiving the same amount of money, but you reduce the effort that you're putting in, that's good for you. And 9 times out of 10, your client will recognize the value and will be happy to pay for it.
Mm.
Okay.
I think that's a
Lead
general
with
feeling
value.
out there about price increases. Everybody is scared to do it. You've been in the business for what, 15 years, Tamryn, so you got your model and you're not scared to do it. But I think
I'm
people are
scared.
generally, everything, are you
I'm
still
scared.
scared?
I had to send out increased letters today. That was fun. It was scary.
Yeah. But I think the thing is we get so used to, because in just a normal life, all the prices increase. You can't buy the same amount of food for the same amount of money.
Mm.
And even in that simple example of you, Tamryn, with the guy who was driving to people for meetings, of course his cost is going to increase because fuel is bloody more expensive.
Yes.
So you have to increase the price you ask for. That's just a normal, and if you think about it from a different point of view, that's a normal result of the sales price should increase because you're paying more to drive there.
Mm.
But it's very scary. I do agree.
Especially at the moment. The world is very sensitive at the
Yeah.
moment. There's been a lot of, some people have had the 2 best years of their lives, depending on what they do. Some
Yeah.
companies have done exceptionally well from lockdown and COVID and all sorts of things, but most people have battled. Most people have lost income, they've lost jobs, if they haven't, then a spouse has, so there's more pressure at home. And so everyone is worried about how much money is going out of their bank account. And the only way you can increase the price is in collaboration with that client. And say, listen, I can't give you the level of service I'm giving you for this amount. It's putting me under strain. It's putting my business under strain. We have to make a change. So either we increase the price or we reduce the service. But if we're going to reduce the service, let's make sure you're still getting what you need for this price.
Okay.
And I think another important thing is to remember is if you free yourself up, if you have less customers who pay you the same amount of money, you've got more time to get more customers in to spend that effort on new clients,
Yes.
which will up your income again.
Yeah. It's one of the biggest mistakes made in my profession, the accounting profession. Accountants tend to undercharge what they are worth. I don't know why. It's just an industry standard that we're scared to charge people. So you'll find that a lot of accountants don't do annual increases, or they're already just charging way too little. But they keep saying yes, firstly, because they need more income. So the only way they can make it if they're not increasing their prices is to take on new clients. So they'll keep taking you on. And also because it does seem to be something in accountants that we like to help. But it's weird because you think numbers people wouldn't care about people. We like the numbers. That's why we're here. But we do. We care about your numbers. We want to help you with them. So accountants tend to keep saying, yes, I can do that. Yes, I can help you. Yes, sure, I'll do that. And then don't charge for it. And so what's a big problem in our profession is burnout. And you see a lot of accountants helping and helping and helping and helping and then collapsing. And then they're not helping anyone. Because if you collapse and your business goes, well, then what are your clients going to do? So that's also something to remember when you're looking at your pricing is, yes, you feel bad charging someone more, but if you don't, and then you put yourself under pressure, you're not going to be there for them when they need you most. So you've got to balance both of those things.
Yeah.
Hi, Tristan.
All good in theory.
Hi.
You joined us a bit late. It's nice to have you.
I lost track of time, but I'm glad I got the last little bit.
That's a shame, man. When did you join?
When you started speaking about sales, cost, profit, cash, and GP.
Okay, so you'll have to catch up some of it, but do you have any questions about tracking?
No, not particularly. As you know, with my line, it's as and when at this stage. So it's very difficult to track, and it's also very difficult to look for new clientele when your product isn't on the ground yet. So essentially, I kind of try and do what you were saying with frequency of purchase and sell per customer, instead of looking at broadening my customer base. You know, and essentially when we're sitting waiting for product and we've pre-sold something before it's hit the ground, you know, instead of looking for a new customer, we try and look at how can we add value to the service we're already providing to our current customer.
Yes.
You know, and how can we be slightly different? But I wouldn't say I have many questions right now. I think it's just a nice refresher on and adding words to what we're doing already. And then I'm sure that I'll have questions with the catch-up when I go through it. Yeah.
That's fine. You can email them through and come to the implementation forum. We had a good one last night. It was late because it was supposed to be last Thursday, and instead my power went off, so we had to reschedule. And it was just Lana and Brennan, me and Linda. So it was a nice small group. You guys got to pick our brains for the full hour and a half. So
wow. And that's today.
That was yesterday. But every month we do the implementation forum. So if you come the end of the month, you bring all your questions from this training, and next week and the week after, and the trainers sit with you and answer all your questions.
Okay. No, I'd love to. Sure.
Cool. Any other questions?
No, not from me. Maybe one of you guys. You guys have all been great with questions.
I think, like Brent said, I used my one question.
You guys only have one and you've used it up now. Is it like a credit?
That way.
I have questions, but it's not about the numbers. It's more about like client relationships, so people stuff. So I'll save that for when we do people stuff. I'll put it in my bank, my question bank.
If there's no other questions about tonight, we still got half an hour. I can answer people questions. Well, I might be able to answer people questions.
No, because it actually has to do with the sales per customer thing. Because that's something. So the thing is, like, you know that Lana and I like sort of doing this thing on the fly for the most part. We try and we do really, and Lana is like being the saving grace when it comes to the number side of things, because like you said at the beginning of this call, I just check out as soon as somebody says math. I'm like, goodbye. But so with the sales per customer, that's something that we were looking at in terms of like adding value or whatever to an existing customer by offering something else. But then we didn't really do math in terms of tracking like what it would cost us to create this thing and whatever. And then because they asked us like, do you guys have this thing to add on, because we provide obviously the ghost writing, the books, and then they asked us about covers, and we just sucked the price out of our thumb and slapped the price on it and gave it to them. And then they just like they stopped asking us about covers. And then a few weeks later, we were like, I wonder what happened to that cover inquiry, only to realize that we were grossly overpriced with our covers. And that's maybe why they didn't come. So now my question is there a way we can fix that? Like, can we we can't say we made a mistake, or can we say it was a typo and this is actually the price of our covers?
That's a good question. That's a very good question. You know,
because I feel like we lost an opportunity there, because this customer actually orders a lot of books from us, and it would be awesome if they would also take covers. But we kind of messed that up by being ourselves. So is there a way we can pull it back? Can we pretend there's a discount? I don't know.
Erode your margins.
Yeah, our imaginary margin.
You know what I would do is get hold of that client, because I'm assuming that's a particular client. Now, if you can get a better idea of what a cost for a cover should be, then you know in the future you can offer that to all clients at that price, because they don't know that you ever had your crazy high price. But maybe just
how do we fix it?
Go to that client and say, look, I noticed you went quiet after you got our quote. How about you tell us what you would like to pay for a cover, and we will discuss with our designers how to make that possible.
Oh, because then it doesn't sound as though we don't know what we're doing. That's a good idea, Ella.
And what you can probably go back to them with a price that's maybe 10% higher than what they say they want to pay, and they'll probably take it.
Oh, wow.
Because they're going to give you a much lower price than is actually worth. I can tell you right now. If you ask someone what they want to pay, they're going to give you a very low price.
They're going to go low.
So you can go a little bit above their price, and you're probably charging something that's reasonable. But you look like you did it for them.
I know, we were caught up. We were a little bit manic.
We were just like, okay, let's just make it $5 million. Anyway, we're gonna look back on these days and laugh. I mean, we're laughing already.
Confused as to why this guy is getting back to us. Like, what?
Like, what's his problem? Why doesn't he want our $10 billion covers? And then, only then, like once he disappeared, only then did we go online to check what do covers go for, and we were like, oh shit. We were way
It wasn't $10 billion, I bet.
No, it really
Don't.
wasn't.
Ladies,
Funny
while
enough.
we're
Tamryn's
talking
idea.
about numbers, one of the things you should really do research on is costs.
Yeah, that's been my biggest takeaway today. Thanks, Tamryn. I learned that cost. I mean, that's how I get my what? My cost of sales. Yeah, or services. Oh, that's a question about the content. Is that because we're in the service industry, so we have our rates, obviously, the freelancers with whom we work, they have their rates. But in terms of, because the cost of our service is more than just what we pay our people, because there's our time and labor and all of that. And how do you quantify that then?
Look,
Is that up to us?
yes, look, it is up to you. In the beginning, it's a bit of trial and error. You know, when you're doing something for the first time, you have no idea what it's gonna take.
Like 10 billion.
No. So, but it's also about project management. So, you know, if you're going to produce a service, you're project managing that service. So once you've got it waxed, you're going to know, all right, we need X amount of authors for this book. I'm going to need a designer for the cover. The designer is going to charge me this much. The authors are going to charge me this much, or I pay them that much, you know, if it's determined by you. Then you know, okay, I'm going to need an editor. I'm going to need a publisher. Or if you are going to do those things, how many hours it takes you to proofread and edit and do the publishing thing, which I know nothing about. So, and
I mean, like in the beginning, sorry, when we just started, we didn't even factor in the editing. So we have some clients who are paying us only for the writing. And then the editing cost is coming out of our profit, I guess, right? So I mean, that's been a learning curve. And now it's just a case of plotting down all of those points that you spoke about and slapping numbers on them and trying to bring the numbers back on track instead of.
Yeah. So yeah, because if you've got once you've done a project and then you look through it and you say, okay, oops, we didn't charge for this, or I didn't even know we'd need this thing. You know, it took me by surprise, but now you know. So now when you're creating a project brief and for the next one, those things are already on there, and those are your costs that you know are likely. Because that's the other thing is, once you've written a book, now you know how long it takes your authors to produce a 300-page book or a 500-page book or whatever. I doubt you work in pages, probably words.
Words, yeah.
But you know, you'll now know how long it takes them to produce those things, and then how much you're going to be paying them. Do you pay per word as well then, not by time?
Yeah. We pay per word, which doesn't seem fair, but
well,
it means
fair.
that a lot of your authors, your clever ones, are really making those paragraphs long.
Well, I mean, one of our writers, was it last quarter, was earning more than Lana and I. She was just like slamming through
She
the
knows
books.
the value of adjectives.
I was like, what?
Don't they ever get writer's block or not?
Yes,
They
they
do.
do.
That's a challenge.
That's when we have to sort of like nurture them and be all, like we were discussing with Tamryn yesterday, how sensitive creatives are. And how you
scary.
have
My brother's one.
Exactly. So you have to be really sensitive to that. And but we try to create an environment where they feel supported and safe and very kumbaya. But now and then it does crop up, and we try our best to support them through it. Yeah, that's usually when we negotiate schedule changes so that they get a bit of a break. And because some of the writers
as
are on
well, hey,
project.
Bren?
Yes,
You write, yeah. So
yes,
you know what it takes for them you know, when they're hitting writer's block or they're having those
that's why
days.
I don't judge them. I don't judge them too harshly.
Yeah.
But yeah, because I was going to say that some of them are on project for like 2 months straight, writing the same book. So
I just wanted to ask, it's probably a weird question because I know nothing about writing, but I don't know, Tamryn, from an accounting perspective, is it like something you should have a provision for in your book somewhere? Like if you have like a block, if you're not going to get anything in, because if your writer's not being able to produce anything, you understand what I'm saying?
Yeah, it is actually that's a very good question. Yeah,
Future
in a creative industry, yeah, you do have this potential that suddenly there'll be no content, and you can't get upset with your writer; they're stuck. So yeah, maybe part of that could be techniques that you know work. So things like sending them to a day spa or something.
We actually do that. Yeah.
Yeah, and those expenses should technically be worked into your project as potential.
Oh, really?
Costs.
Also worked into the project.
Mm.
Can you imagine cost of a project pampering the writer? Oh my goodness.
Now you come up with a good accounting word. I'm sure between me and Tamryn we can come up with a good accounting.
Like staff welfare term.
Something official.
Staff and welfare. There you go. Staff and welfare. That is a valid accounting line on your financials.
It is, yeah. Look, technically, I would say it's probably more operating cost than project cost. But when you're planning your project, you need to make provision for it. You need to know that it might happen.
Because that is something we do, Helen. Like when they are sick, we send them flowers. So there's but I think we have a gifts budget. Is that what we do? Because we'll send them flowers. We have like awards and prizes for.
I can write for you guys.
Listen, we are hot on Google's heels as like one of the companies to work for, according to our writers. But yeah, we spoil them too much. Really.
They'll come right for you. Surely there's some accounting expense. Surely I'll write an accounting romance. I can do it.
We actually
did one. We did one.
Yeah. An accounting romance. Yep. And you know what it was called? It was called Loving the Balance.
Very.
Excuse me.
Very cheesy. Very cheesy. But yeah.
And you, Rona, you also write. It's a different type of writing, but you also write. How are you managing your projects?
Slowly, I guess, is the answer. I'm just sort of starting out, so just trying to move away from Upwork and get into pitching. But I've kind of got a little bit distracted by a freebie, which is a big learning curve of offering some content writing in exchange for a testimonial, and it turns out it's an entire website, not only the content but actually uploading it on WordPress. So it's taking, obviously I can't focus all my time on it. It's just kind of grown arms and legs a little bit. I keep telling myself it's all going to be good. I'll use it as a case study, and I'll have somewhere to send people as a sample, because it's the niche that I want to focus on. I'm just trying to be more consistent with my own sort of posting on LinkedIn as well. But lots of plans and good intentions at the moment.
What's your niche, Rona?
I'm wanting to write for sort of the holistic and wellness sector. It's something that I find that I enjoy, and I know a bit about, and I think I can help people in that sector and sort of get their messaging. A lot of websites that I've come across, people talk about themselves immediately. One of the first websites I had looked at was, guy was so qualified and had so many letters after his name and did all sorts of different modalities, and I'm thinking, no, nobody hears. We want to know like how are you going to fix them, or what are the benefits of coming to work with you? So it's things like that. So I've been working on a sort of doing a content review for people as the offer, because one of the things that I found challenging is, like, I do lots of different content writings, from blogs, sales pages, email sequences. So I want to be able to offer people what they need, rather than me just trying to sell them something that I think they might want. So I want to retain all my services. So I was sort of just looking for what's going to be my introduction to what I can do, basically.
Okay.
So that's where I'm heading at the moment, is just to try and offer a basic content review, looking at any web pages, social media, email sequence, blog, and just give them feedback on how they could improve. Not a little bit of SEO, but like a lot of the SEO stuff, you really need access to their Google Analytics and search content, and I don't really want to go down that route too heavily, but I would just sort of the basic on-page SEO, sort of like slugs and structure, and they've got like titles and meta descriptions and things. So we'll see how it goes. I was meant to start pitching today, but I got distracted, so I've just kind of pushed that off to next week, and I will actually get round to sort of setting. I've got a set of leads that I'm going to try this out on. So
okay. And your pitching process, are you going to do the cold emails, or
I'm going to do emails with a short Loom video.
Okay.
So that I can, like, they can see that I'm making the video on while I'm on their website, and maybe point out just a couple of things that they're doing well, and ask if they would be interested in this service that I'm offering. So sort of give a couple of tips, initial tips, and basically, like, my call to action is just jumping on a call, really, so that we can have a chat and see. I think I do have we need to be salespeople, but it does scare me. But if I'm trying to say to people, I can make your content and your emails, your sales page work better for your business, and I'm not actually putting out any content of my own, then I need to be able to do what I say I can do for others. I guess so.
Rona, have you been on Christine's website?
I haven't. No, I'm in her Facebook group, but I don't think I've been on her website.
Go check her website and see. She runs a free workshop every month. I don't know which one it is at the moment, but one of them is on confidence building, and it's very, very good for sales and things like that. If you feel scared before going into a sales call, Christine will get your confidence up. So just keep an eye on her workshops and see where the confidence one comes up.
Excellent.
It's very intimidating.
I've shared a link in the chat for you, Rona.
This
woman is fabulous, and she really helped me a lot when I was doing freelance writing. So her whole website, she's got tons of free resources specifically about getting clients in your freelance writing niche. And all the content there is free unless you sign up for the paid course, but you don't really have to, because there's enough value in all of her free content.
I was actually going to say that between Lana and myself, we have over 20 years of freelance content creation.
Wow.
So if you ever want to throw ideas around.
If you have any questions, I mean,
yeah,
we obviously bailed as soon as we could.
Yeah, we need to as soon as possible.
Find them on LinkedIn, Rona. They're both on LinkedIn.
Yeah.
Oh, fabulous.
Any questions you have?
Yeah.
And then the other one I wanted to also just mention is Marie Folio. I don't know if you've heard of her.
Marie.
She's really good in terms of, and her podcast, she's got like 5 minute, 4 minute, 6 minute guidance episodes. So you get it, it's bite-sized, but it's packed with value, and it's about all those things like discovery calls and blah blah blah. So definitely check her out. And then also The Future, so it's future but without the E. He gives amazing, like you feel it in your soul, like you believe him when he tells you you can do things. Just business advice, and for people starting out, and especially in our field, in the field in which you find yourself. So he's helped me a lot in terms of sales, and especially when it comes to clients, because you're going to get the client that's going to try to talk you down, and you know what you are worth. And like Tamryn was saying, you're going to have lead with value, and that's why I think your pitch idea is really good. Doing the video, that because that's showing the value that you're going to be bringing to your clients potentially. So that's a really good idea.
Oh, good. Well, I shall report back and see.
Yeah,
I know
good luck.
it's like I'm aware myself that I'm procrastinating about it, which is why I've not done it yet. But I will definitely. And you know, I yeah, totally trying to work on the mindset. You know, nobody cares. It's not, you know, trying to separate that it's business, and they might not need or want the solution that I'm offering, and that's okay. Somebody might, somebody hopefully will. So it's just like, just go for it, and you know, don't allow myself to be devastated when I'm obsessing over like a streak. How they've read my email. Got my email checking on.
Yeah, I mean, you're gonna have to fake it till you make it. Lana and I are still busy faking it. We wonder how long it's gonna take us to make it. But so far,
Well, look at all that knowledge sharing you girls just did.
Yeah.
Rona. I mean, that's fantastic.
That's amazing.
Yeah.
Listen, I'm 15 years in business. I still fake it.
No, we don't have to. Yeah.
So what you're
Everybody
saying is
is.
that
That's the
there's no making it. You're just faking it like in perpetuity.
Yeah. You know, the thing is, I don't know if you guys have read The Subtle Art of Not Giving a Fuck. So I don't know if I should say that on a recording, but anyway, it's a great book.
I started, but I stopped.
It's a great book. And the title is far more what's the word, controversial than the actual book. And what he actually teaches.
This is the one this is Marie Forleo, and her book is called Everything is Figure Outable.
Nice.
Yeah.
Very nice.
Anyway.
He no, he teaches it's not about not giving a fuck, it's about giving them about the right things. It's about putting your focus where it's important. And one of the things he says in that book is you never escape problems in life. You're always going to have problems. I'm saying 15 years on, I'm still faking it in certain areas, because when you overcome one area and you upgrade your life or your business or whatever, you upgrade your problems. You know, that's the way life works. You've now got a bigger income, you're going to have problems associated with a bigger income. If you have a bigger house, you have more area to clean, you have more area to protect, you have more things you need to buy to fill it. So every time you upgrade something in your life, and you go, and that in terms of building a business, it's the same. You built your foundations, and it's hard, and you're faking your way through certain things, but you're going to upgrade to the next level. You're going to fake your way through a whole bunch of new things, because there's always something to learn. And there's always something that you're going to feel like you don't know. And you just got to remember, this is why I love this builder and this group, and the fact that, I mean, we're way off topic right now, and it's fantastic. It's wonderful, because this is important. It's important to hang out with other business owners and realize that we all battle. You're looking at, I joined a mentoring group last year. And the rest of the accountants on that group, can I tell you, are way out of my league. I was a very small fish. And I spent a lot of the time quiet. But you hear these accountants or these other business owners that I look up to as being wildly successful, and they're facing the same problems that I do. They have the same confidence issues that I do. They have the same fear of sales and marketing and raising their prices and people. And so it's not, you're not facing these things because you're not successful. That's just, these things are just there. And it's nice to hang out with each other and realize that we all face the same things and we can all get through them.
We're all winging it together.
Yeah.
I actually had a session, and Tamryn, I think it's on the Builders website as well, with Christine that Tamryn was talking about now. A one-on-one with her about confidence in the social networking space, because I am terrified of getting, I mean, I don't even want to update my Facebook. I asked my husband to go and post my birthday photos. I'm too scared to touch anything. I'm the oldie. I can't do the young stuff. It freaks me out.
Your birthday photos?
Yeah, well, I turned 50, so it was quite of a big birthday. So, and I've got lots of friends in England. And everyone is asking for photos, so I thought I could just do it. But anyway, what I'm trying to say is, like, I had this session with her just talking about this, my confidence in social networking. And she's great. She's very a caring person. So I'm trying to have a look on Builders Warehouse. Builders Warehouse.
You got so flustered talking about Facebook.
I know. See what it does.
It is a warehouse. It's a warehouse of special offers.
No, please never associate it with Builders Warehouse. I hate that place. But there's good stuff on there, and there's good content, contents and contacts on there as well.
Okay.
Yeah. So ladies, we have 5 minutes left. Are there any questions you want to throw at me in the last 5 minutes? We're so off topic. You can throw anything at me at this point.
Social networking. Look at that Lana brain. They're like,
we're not laughing at you.
No, we laugh
never.
out of compassion. It's actually compassion, because
I also have social networking anxiety.
I know the feeling.
that's the word.
It's just, it's nice when you realize you're not alone.
Yeah.
Absolutely. I have a question, Tamryn. I don't know if it's an appropriate question, but so far, my income is still in a PayPal account. I haven't set up a business bank account or anything, and I haven't touched it yet. How does that work? I know obviously UK tax is different, but does that have to be included since it's not actually anywhere yet?
Yeah, look, the thing with taxes, this is universal, is they tax you on what you've earned. So I mean, this is here especially, they're very good at closing those loopholes. They don't care if you've received your money, so they care that you've earned it, and they'll tax you. And I think the UK is quite similar in that regard, although they might give you better payment rates. I don't know. But yeah, in terms of taxes, you need to declare everything you've earned, whether you've received it or not, or if it's sitting offshore or whatever the case might be. I'm not sure how the UK works in terms of earning income from foreign sources, because if it's sitting in your PayPal account, I'm guessing you've earned it from overseas sources. So at least it's probably exempt from VAT, although you probably don't have to worry about that just yet. But you're going to have to account for the income. But you probably, because you are freelancing, I'm very sure you'll find that your expenses that you are allowed to claim will exceed that income. So you can.
I know this is a ridiculous way to be starting a new business, but I also so I still have a part-time job. But I also rent out my house, so I'm a landlord, so I do tax returns because of that property. It's a section of self-assessment, but because there's like as a sole trader, I just it's all the one pot of money. It doesn't matter really where it comes from. So I'm just quite happy to spend money because I know it's just going to be tax deductible at the moment. So like I've bought a like website domain names that I've not done anything with, and bought a trading courses and things like that I'm like, oh, that's fine, just spend money. It's tax deductible. Although trading courses are a little bit different. You're in the UK, you're only supposed to claim for trading that is brushing up your skills rather than learning a new skill.
Really?
Yeah, it seems very strict on that, but I'm just going to go with it. I checked with my brother, he does a similar thing more successfully than me, and he said he's always just claimed all trading courses. So.
Well, technically, and this is a loophole of note, but technically, if you are a writer, in order to improve your current skill, which is writing, you need to do a lot of research in a lot of areas. So theoretically, any training course you do increases your current skill because you can write about it.
I have 2 diplomas in forensic psychology.
Ooh.
as a writer.
Research.
Because I
why are you writing romance and not thrillers?
No, I write crime novels. I don't write the romance. I manage the romance writers. But I wanted to start writing crime novels, and so I just studied crime.
Oh,
Oh wow, that's amazing.
That's
I love
nice.
my
Yeah.
crime novels.
Yeah.
Sure.
Lorna has to help
Detective
me crack
Bradley
my
one
first
of these
book.
days.
or romance
Girl.
novels where they kill each other. You can do those too.
The dark
Crime
romance.
of passion.
Oh my goodness.
You know, Agatha Christie wrote both.
Yeah.
Did she?
She was
Okay.
she wrote obviously the crime was Agatha Christie and her given name,
Yeah.
but she wrote romance under the name of Mary Westmacott.
Oh wow. I did not know that. Tamryn, are you like secretly interviewing for a spot on our team?
I love
Trying to
reading.
wow us with your literary prowess.
I really love it. And Agatha Christie happens to be my favorite author. So I own all of her books except the romance ones because that's
Oh wow.
it's the one genre I don't really read. I should tell you that.
So me as well. I don't read romance. I don't read it. Or I mean, there are romantic elements in the stuff I write, but I write sci-fi, and I'm starting to write crime now.
I'd love to read your crime.
Cool, man. Now you just put the fear of God in me, and I'll log off. I'm terrified. Like you'll make Lana cry because she hasn't read anything I've written. She's always like, when am I gonna read your stuff?
Isn't it amazing
Well, good
how
luck.
we like to write? I write for fun, and there's no way you're reading any of it. I can tell you right now. But you
Now
can
I
read my
know
business
you are
books. You've read my
interviewing.
business books. You can have those. But yeah, all right. Isn't it amazing how we love writing, but we won't show it to anyone ever. You don't want people. You love your story, and you don't want to show it to someone else, and they don't love your story.
I mean, like I told myself that this year I'm publishing. Come hell or high water, I am pushing through the fear. I'm gonna get over myself, and
Have
I'm
you read
doing it.
Big Magic?
Oh no, I still haven't taken it out of my bag.
Read
But
it.
I
It'll help
will.
you with that.
Yeah. That's the thing that's my big thing that I'm doing this year. Just watching, because it's like everybody else is publishing except me. So
Well,
I
I'll
really
come
need
to
to
your
get over
Self-publishing is the
myself.
thing to
launch
do these
party.
days, eh?
Yeah. Yeah, we get to have a launch party. I think I must have like a launch weekend, like
Is it
And
Kardashian
then
next
some people
week?
will
style.
be killed, and the whole point of the party is to find out who did it.
Who did it?
It's
We
like
can have
another
a
tax deductible expense there, right, for you.
Yeah.
Launch parties. Absolutely.
I've got to
Yeah.
run, girls, ladies, sorry.
That's why we
Great to
are
see you
at
all
the end of
again.
our time. I'm having fun. If you girls want to hang around for another 5 minutes, you're welcome. But we are at the end of our time. So
See you next time.
have a great evening as
Yeah.
well.
Nice to meet you.